So FedEx. I saw that the stock gapped down very aggressively, okay, overnight. You see that? How it dropped like really hard here on the daily time frame?
Yeah.
So I saw that and I was like, holy shit, like let me look at the weekly chart, right? So this is the week to week and let me look at the monthly chart, okay? So every candle is 1 month each. These are just my alerts. These are like my buy areas, these yellow lines, you see?
Oh, okay.
So I looked all the way back here in 2017 and I noticed that this stock had a lot of important reactions around this area. Like look like right here, it kind of like pushed up and then bounced off of that 217 area and pushed up, right?
Yeah. Yeah.
And then it came back down to like 225 and then pushed back up all the way to like 312 from 220, right?
Okay. Yeah.
So that's what is showing me as a demand zone, quote unquote. Even like here, it drops down very aggressively with where my mouse is, and then it bounces all the way up, right? That's very aggressive bouncing. Then all the way back here. So just what I'm saying is like you see how there's a lot of reactions, like aggressive reactions when the stock comes into this zone.
Yeah.
So then I went from the monthly time frame zone down to the daily time frame, and I noticed, holy shit, like FedEx is gapping down all the way into my zone, right? I mean, that's like, have you ever heard of something people say online, like, hey, imagine if you bought Bitcoin at like, 10,000 or like $5 a coin, or like, you know what I mean? Like, imagine if you bought Amazon in the year 2000, right? Or real estate in 2008. You know what I mean? Like, that's like if you were able to buy this stock, FedEx, at the same price that it was in 2017, would you do that?
No.
Why not?
Because at that point it was like down, but maybe like my basic average prediction is that I would see a yearly analysis, and like if the in the yearly analysis, like if I keep a stock, like as I'm a stock market investor, so if the yearly analysis says it goes down, it goes up for like 10% or above, then I would like try to invest it, because I feel like in next year they can actually improve it more.
Yeah, so on stocks, brother, you want to buy when they're low, right? So
Yeah.
what my point is, maybe you misunderstood, but my point is, if the stock dropped all the way down to the same exact price that it was in like almost 10 years ago, right? Like 8 years ago in this case on FedEx, like that was
Mm.
all time high 8 years ago, and now it's dropped back into that area. So like we know FedEx, right? We know FedEx is a company that's most likely going to be around for at least the next 10 years. Would you agree?
Yeah, yeah, for sure. Like
Right.
it's like one of the companies to deliver things stuff.
Exactly. That's why it's
Yeah.
so important to focus on these quote unquote blue chip stocks, is what I like to call them.
Yeah.
So I purchased the option contract for let me see here on my phone, I'm looking at it. It's for June 20th, okay? And I bought the contract that was for the strike price of 200. So I'm basically saying when I buy that, Purna, that I'm betting that FedEx is going to be above $200 a share by June 20th, right? That's what I'm saying with that contract. Does that make sense?
Yeah. Yeah.
So that's the contract that I bought. Let me go ahead here to the option chain and show you FedEx. Let me show you like right here. Um, at June, and then the 200 call. So this is the one that I bought today. And this is the bid over here and the ask. I know, don't be confused about all the numbers, just look at the blue area here.
Mm.
So just focus on that right now with me. So I bought that option this morning, and let me show you. I'm going to copy this. So let me show you the movement of that, okay? Are you following with me so far?
Yeah. Yeah.
So let me show you the movement of that. Let's go to the chart here. So let me get rid of that. All right. Sorry, it's a little bit confusing. We want to
No
go
worries. Yeah.
on the daily here. And I'm gonna get rid of these lines. I don't know why the hell this is there. Sorry. And then let me get rid of that too. Remove study. Alrighty. So, okay, just look at these green bars. On the left of the screen here, I have FedEx itself. This is literally FedEx's chart, right? On the monthly time frame. So let me go to the daily time frame and then show you. You see how it's a bright green candle?
Yeah.
And I bought it below 220 today because that is exactly where I saw that it went into my monthly time frame demand zone from 2017. Do you remember that I showed you that?
Yeah. Yeah.
So 2017, and then over here in 2022, and then over here in 2023, it showed me the bouncing. Now it's 2025 and it's back at those same levels. That's called a discount, right, Purna?
Yeah, that's true.
So I would say that it's a huge dip, especially when it drops overnight. Do you know why it dropped overnight? It dropped overnight so aggressively. You can see the stock is down 6.5%, even though it went big and green today from the bottom. Earlier, it was down like over 10%. And it dropped so hard overnight because they reported an earnings report, and Wells Fargo also downgraded their price target.
Oh,
So that you got a bank telling you screw you, and then you've got the market saying screw you in your earnings report. So I see that as a discount.
okay.
And so what I did on the right here was I spent 2,400 to 2,005. Let me actually check on my phone. So I got filled at 225.15, which means I paid $2,515 per contract.
Okay.
I know that's way out of the price range for the $100 you telling me you have, but I'm just trying to give you like the idea of security. I bought a really in the money call option, meaning that I'm expecting FedEx to go up, but I want to be safe, okay? Because
Yeah.
options lose value every single day that you hold them, right?
True.
So if you want to counter that losing value, you want to buy an option that's going to be in the money and the stock has to go your direction, right? You want it to go up because you bought a call option on
Yeah.
FedEx for June for the 200 strike price. Right now FedEx is at 230, and so my option right now is worth 36.88% increase from when I bought it.
Oh, okay.
So I spent $2,515, $2,515 per contract,
Yeah.
um, and now it's up 36.8%.
Okay.
So right now the contracts are worth about $3,400,
That's cool.
and I bought them for 2,500. So I made about $900 gain per contract,
That's cool.
right? Today, only
Yeah.
today, right? Imagine if you made $900 in a day.
That's true. That's so cool. Yeah.
That's really good, right? So I'm telling you this because I've been doing this for 5 years, brother, and I lost all of my money and some when I first started trading in 2020. And like I literally had to work my ass off doing sales back in the day to I was literally selling pest control door to door, and I had to make money during COVID, during the coronavirus, epidemic or pandemic. So that's how I made my money back, and then I started trading like normal, like a normal person, should, in my opinion. So that's kind of a little bit about my background. So what, it sounds like amazing, wow, $900 gain, but I'm telling you, bro, like that's 5 years of pain and struggle to get there for me.
Yeah.
So now I love to teach now because I don't want anybody to ever go through the pain that I had to go through to learn all this. So anytime you ever have a question, man, about anything, just ask me, okay? I got you. All right? Just want you to be confident about that. You got me, bro.
Yeah.
So is this making sense so far?
Yeah. A lot of sense.
So the option contract is this one on the right. It's not exactly a share, right? Because if I bought a share at 220 today on FedEx, it's at 230, right? If I bought one share, how much would I have made?
if you bought one share, so right now the share is around $230, right?
Yeah, but if I bought one share at 220 and it's at 230 now, how much did I make today if I bought one share?
Mm. Yeah, it's like $10 more.
Exactly, $10. Perfect. So
Yeah,
that's the difference between the share versus the options contract, right? I spent, 2,400 or $2,500 on the options contract, but I made $900, right, per
yeah,
contract with one. Now, if I bought
yeah.
one share, it's safer. Yeah, it's safer, but it's gonna be less money for safety. So you understand, like, you're gonna.
I've lost you.
Can you hear me? Can you hear me, boss?
Hello.
Yeah.
Yeah,
Can you hear me?
yeah.
Sorry about that. I don't know what's happening. Maybe I have to quit my Zoom here. And let me quit this thing too. Yeah, I'm just trying to quit these apps to see if they. Yeah, all right. Is that. Can you hear me?
Yeah.
Dope. Um, where was I?
So like yeah, so like you were telling me about if you take a share or as option. So like if I took a share, I would have got $10, but it's safer. But then in options, you're making $900.
Right, on this contract in this same move. Yeah. That's just because the opportunity was so amazing for FedEx today that I just decided to buy that exact thing.
Lost you again.
Oh, man.
Can you hear me now?
Yeah, I can hear you.
I can hear you. Yeah.
Okay, dope. So weird. Sorry about that. I don't know what's going on. Yeah, let me try to just let my computer cool down. All right, can you hear me, brother?
Yeah, I can hear you.
All right, let's see if that works because I kind of cooled my computer down there. So, yeah, essentially what I'm trying to say is that options are going to be much more volatile than a share, right?
That's true.
Very aggressive movements. So what I'm saying is that most people lose all of their money when they trade options. That's why I would highly recommend you to at least have anywhere from $500 to $1,000 in your account before you started trading like aggressively. You know what I mean?
Oh, okay.
That's what I'm trying to say. Like you can do it with $100, man, but it's gonna be very risky. Like very risky.
Uh,
Like you have to like day trade. You know what I mean for that.
yeah. And day trading is like so volatile than
Yeah, it's
normal options.
dude. If you want to keep that $100, just I'm telling you, I would. I've gone through that, man, many times in my life. Like I would just strongly recommend you wait to trade before, like, just practice. Why don't you just practice trading until? I mean, is there any way that you can get $500 to $1,000 in your account, just in your trading account?
Trying my best, but then money just like goes like that. Once like I do a job in the university, and
Oh,
then they told me they'll pay me, but they didn't pay me yet. So like I'm just looking for it. As I'm an international student, the problem is that I can't get a job here, and then like if I get a job, I have to get a sponsorship status, and then like there's a lot of things going on. So like that's why I'm like using my parents' money right now.
right,
Uh,
bro. If you can use your parents' money to like cover all your other expenses and just kind of use your job to save up money, then like try to save up like 500 to 1,000. Um, just try to save right now, and then and the reason I'm telling you this, man, is because just a couple days ago, I alerted a Microsoft trade down here at $383 a share, just like a few days ago. All right, on the left, can you see that?
yeah.
So Microsoft right now is at 391, and I told my group to buy it at 383. So like, if I go to the options and go to Microsoft, I told the group that I was buying the May 16th expiration contracts at 405. So let me show you. So I'm telling them that we're betting that Microsoft's going to go over $405 a share before May 16th. Okay? Does that make sense?
Yeah.
Alrighty, just want to make sure you're still following me, brother. So
No worries. Yeah.
that contract at the time costed about 850 bucks. Okay. Now that contract is worth 1,030 bucks right now.
500 easy money.
So from 850 to 1,030. That's what it's
Yeah.
that's what's happening right now. So that's what I alerted to them, and so that's like, like an almost 20% gain
Mm.
in just like 3 days, which is great, right?
It's
And I think it's gonna keep going. So like I'm looking to see if this contract can be worth maybe like 1,500 bucks a contract, and maybe if the stock goes to like 405 to the strike price, these contracts should be worth about 2,000 bucks or more, maybe 2,500 bucks a piece from 850.